investors like at least me, which is not a high net worth investor, if want to invest in a bond, I will have to pay out like around 200 to 250,000 US dollars only as one to buy only one ticket of bond. So one issuance of bond I can only buy with $250,000, which is quite a significant number. So making it simple, faster and cheaper reduces the barrier of entry. With digitization and with fractionalization, I can reduce that number to as low as $1,000, which makes it more attractive. Everyone wants to have a fixed income instrument as part of their portfolio because they are considered relatively stable and less risky. And again, if you look into the equity market, for any IPO to happen, again, a lot of money is required for due diligence, issuance, market making and other activities. But again, if we move on the digital front, that initial cost of entry is quite low, which allows SMEs and other small scale industry participants to come in and issue their IPOs. So it reduces the cost as well as brings efficiency to the system. Again, if you see any value chain today in the financial industry, it's quite complex. There are a lot of actors which are required. Just are audited within the technology, and it can be accessed by everyone within the ecosystem. Coming to what are the everything is looking extremely nice, then the question comes that why not the entire industry has moved toward digital assets and the use of blockchain altogether. There are some potential considerations for this organization and for us to use. There are certain challenges as well. What exactly are the considerations? Currently, the financial market itself is quite complex, and it has been well established. Moving that to a digital or a blockchain world requires redoing of a lot of activities internally, how the deals will be structured, how the financial products will be structured, how different systems will work together. Because for example, for the fixed income to reach such a high level of maturity, it took 50 to 100 years. Now that we are transforming it into a digital world, it will again require a journey for all the participants to have the same level of understanding, same technical capabilities, which in itself will take time, and eventually if the entire value chain sees the benefit, we will move to that new system. Interoperability and integration is again a big challenge, because all the big financial institutions have a big tech stack, right? They invest billions and millions of dollars every year. So for example, JP Morgan tech budget itself is around $5 to $10 billion a year. So they have all well defined and well developed internal system. Now that if a new system wants to integrate with them, it will require a lot of CapEx and OpEx infusion. And how it will work with all the internal systems. So these are some of the questions which financial institutions as well as corporates are trying to answer as they are on going this journey. Legal and regulatory hurdles. This is quite happening right now, that a lot of regulators are trying to answer these questions, that how these new instruments, new structures will work. What are the risks, what are the other aspects which have to be addressed before this can be exposed to the wider market. Some of the regulations, we would have seen like few regulations coming in the last few months and few years, But yet I can say that it is something which is work in progress, again at different level of maturity, but we will eventually see that how different regulators will work together. And again, this is one question that right now most of the regulatory and the legal work are happening, which is inward looking. First develop this entire regulations for the country, and then we will see how different countries will work together. But that is also something which is work in progress. There are multiple regulators who have come together to work on big massive programs, but these are again pilots and proof of concepts. Very less of this have seen the live implementation so far. Coming again, we would want to answer this question where the first point which I raised, that a lot of time when we talk about digital asset, we equate it to Bitcoin, right? The answer is yes, but not completely. There are various aspects or various types of digital asset. But before going there, I think we should look into how digital assets have evolved over the period of time to what it has reached today. So again, digital asset is not new. It started in 1990s when we started seeing our email getting digitized, our music getting digitized, and various other products moving to the digital world. 2009 is the year when Bitcoin came into existence. Since 2009 to 2017, there were various cryptocurrencies and other products which came into existence. It is that time when cryptocurrencies became, the market size became quite big. So at around 2017, it was estimated to be around $800 billion, which was quite a significant rise from 2009 to 2007. As of today, it is being, cryptocurrency market has lost significantly and has gone below $1 trillion in valuation. Last time I checked, I think it was yesterday, it was running at around $920 billion estimation, which is quite significant, right? It like a multi-billion-dollar industry. From 2017 to current date, we would see that the usage of the technology increased because we saw the rise of cryptocurrencies. Tokenization became a phenomenon. There were a lot of experimentation which started in 2017 and onwards to see how different asset classes and different instruments can be tokenized, and what would be the impact on the existing financial systems. So various factions of the financial industry and the regulatory industry started working on this particular segment. And today we will talk about what the market outlook looks like and the value of it. From the evolution of digital asset, which earlier started with only cryptocurrencies, today on a high level there are around 20-25 different types of digital asset or classification of digital assets which exists. Not only cryptocurrency, but there are other aspects, and now even central banks are looking at digital assets, that how they can use digital assets in improving the functioning, right? There can be a specific session about CDBCs, which is again very interesting, growing extremely rapidly. But talking about other, I will just pick one or two examples from here and we talk about it. For example, security tokens. If you see, or equity tokens in some places it is referred to, are one of the most used token types today. What exactly equity token means is the digital representation of the existing equities in the, again I'm going for a very, very simple definition so that we can understand, we can interact with each other. But again, if we go in deep dive on each and every of these tokens, we can certainly have like hour-long session just to discuss and go into finer details. The other asset class is, or the tokens which is used more often is security tokens. We have seen the emergence of fiat-backed tokens, which are also referred to as stable coins. in certain lingos. Then new asset token class like utility tokens. Utility tokens are very widely used, and in terms of regulations, they have been adopted by various regulations, specifically like Singapore, UK, and other regulations have started using utility token. And I'm pretty sure that this list will keep growing as and what the new functions are being defined, new assets are being developed. This list keeps growing. I remember I did the same study in around 2018-19. I only had like 7 mentioned, and now it has increased to double. Quickly going to what are the different trends what we are seeing. Is anyone actually using it, or is it just a fiction? Looking at the market development, we can see that there have been significant adoption of this technology and this entire digital asset altogether now in implementation. If we see starting from 2019, most of the participations were from the early adopters, the risk takers. But now if you see by the end of 2020, the exercise what started as proof of concept and limited exposure have now grown multifold. So now if we see organizations like JP Morgan, HSBC, BNP, they have created multiple products and are using it in your day-to-day life. So very recently Goldman issued a bond in Hong Kong. JP Morgan spun off a separate entity named Partior together with DBS and Temasek in Singapore, which is entirely focused on the use of DLT and digital assets. Signem, which is one of, earlier they started as a fintech, but now they have a banking license in Singapore and in Switzerland. They are mostly focused on digital assets, so the market value and the adoption is rising. These are some of the recent projects what have been launched by some of the major financial institutions. So you can see all the top institutions in the world are using digital asset. How is the rise in digital assets? So if we see our journey started in 2019, so 2019 if you see it was only Fidelity, Swisscom, Nomura, Societe Generale. They were the only organizations who adopted and started experimenting with a digital asset and blockchain. But now if we see within the span of 2 to 3 years, it has gone up significantly. Now name a global bank which doesn't have a digital asset team. Very hard. Or not only banks. Look at technology company, look at consulting practices. All of them have dedicated digital asset teams. So this depicts that the institutional adoption of digital asset is at a rise. But again, most of them are slowly transforming to what started as a pilot or a proof of concept into a mature product which can be offered to institutions as well as individuals. Again, now slowly it is getting complex. Now you see a lot of logos in a very congested space. So this is on a very high level what exactly there are, what are the different products and projects which are in flight. So if you see the horizontals and the verticals, you will see that there are multiple aspects of digital assets and the functions and the activities within any organizations which has been captured. And again, you will see almost all the big financial institutions and corporates, they have been mentioned in this. And this was a very recent study which was done by one of the institutions which is headquartered in Singapore to find. And here again, example, if you see the most congested area here is of the regulators, right? So most of the regulators in the world are developing the regulations because of the needs and the demands and the wants from the market. I know there will be some questions regarding Qatar as well, that what is happening in Qatar, but more than happy to share. Again, deep diving on some of these verticals that from the institutional perspective, that okay, we talked about institutions, we talked about corporates. What about fintechs and startups? Where do they exist? Are they actually the ones who are providing these? The answer is yes. One unique transformation what I have noticed personally, which is happening is, and I'll again go to the previous slide for that, is that if you see any horizontal, right, infrastructure, you will see a mixture of regulators, corporates, financial institutions, and fintechs. So the entire ecosystem or the entire value chain is coming together to create these value proposition. If you see the first any of the blocks, you will always see some of the fintechs name being mentioned there. Most of these products either are being developed together with these fintechs, or completely by this fintech and then white labeled by some of these organizations. And there are again various ways and capacities in which these fintechs are participating. So again, if we look at this, most of the names what you will see there are fintechs, right? So in terms of market size and future projection, we all want to see money, right? Is there actually some money behind this or not? So based on all the studies, we have seen that there is going to be a significant rise in the valuation and the market cap of digital asset altogether. Currently today, there is very less mean to quantify what exactly the digital asset market will look like, but these are some of the projections which we could have gathered. So if we see here the bar chart, we can see that most of the assets, including the cryptocurrencies and the non-cryptocurrencies assets, would see a significant or exponential rise in terms of the market valuation as well as the number of users who will be using it. And if you notice that most of this slide sees a tremendous amount of growth from 2019 to 2020, right? Then again the question comes, what's the correlation, right? What happened between 2019 and 2020 that saw such a significant rise? We all know the answer, mainly because of the COVID. We saw a lot of products and services and focus on the digital, and hence the adoption increased. First, the adoption increased with cryptocurrencies, because at that time all the valuations were at prime. Now that they have taken a nosedive, but 2019, 2020, everything was at its peak price, so it was attracting a lot of users and activities there. And at that time, most of the financial institutions started releasing their products for investments. So in the previous slide, we saw that 2018, 2019 is where these institutions started experimenting with digital assets. It was 2021, 2022 now that these products are being released in the market, and hence we are seeing the adoption increasing. By 2027, it is expected that around 500 million users will be using digital assets. We could already see teenagers and some young that they are more inclined towards NFTs and metaverse than the actual assets. But yes, that can be one of the factors who will catapult this entire value proposition. But again, others is mainly driven by efficiency and creation of new products. Looking at the market opportunity, again, this is one of the questions which comes, like, what is the market opportunity? Has everything, all the benefits have been extracted, or is there anything left for us? Yes, this was an analysis which was done by BCG, and we found that currently we talked about equity tokens or security tokens. Why so much focus on this? if we see the current market size, and this was taken at around 2020, that there are around 76,000 firms altogether, right? Out of which only 22,000 firms are public, which are listed. The remaining are yet to be listed. So if we just do a simple maths, we can see that even around double to triple the size of the existing publicly listed firms would be available if these technologies can be implemented successfully. On the other side, if we see on the real estate, around only 11 trillion of the real estate is in the public domain, whereas around $300 trillion worth of real estate is in private, which again, if it is tokenized and properly and is available for investment, is quite a significant number. I will not go through detail. I think we are about to overrun. But again, looking at some of the how the revenue generations can be done, what are the various aspects in which fintechs and financial institutions can work together. First and primary is in terms of asset tokenization. Most of these institutions will require technical capability to tokenize these asset classes, and mainly as a technology provider. Second is with respect to trading. These asset classes or these tokens will require a platform where it can be traded or exchanged with other counterparties. There again, these new platforms will emerge, and for example, Binance facilitates the exchange of cryptocurrencies. Similarly, if tomorrow real estate is being tokenized, there will be a requirement or a platform where I can exchange with others. The buying and selling activities will happen. Custody is again a very important area. These assets or these tokens have to be custodized properly in a nice and a secure manner. This again opens up a lot of opportunity for the fintechs to develop these propositions. Because if you see, most of the existing custody services, especially in the crypto and in the digital asset world, is developed by fintechs. Apart from few names, and there are few large institutions who are developing this as we progress, but the existing ones, a lot of them is owned by or operated by fintechs. Then comes the payments and the liquidity. This will require the existing world and the digital world to meet and work together. So there will be a requirement of the fiat currency, which is the existing currencies what we used, to be exchanged to the digital currencies, and vice versa. Again, an interesting topic with regards to what is happening around the world in terms of regulations. So if you see, the ones which are marked in pink are the ones which have the most mature regulations. So we only see like very few countries which have reached the high level of maturity as of now. But again, a lot of work has still to be done. But if you see, most of the part of the world is either developing or in like very early stages of developing these entire regulations, how this can be, how to monitor, how to safeguard the customers, and how to make sure that the implementation is done right. A quick analysis which was done by the PwC. This is not entirely digital assets, but with respect to the crypto regulations, because sometimes these words are used interchangeably, that crypto assets and digital assets, depending upon what the definition has been adopted by that particular country. But again, if you see, there are very less jurisdictions around the world where you will see all the boxes marked as yes. So as we saw previously, most of the regulators are working in this direction. It's just that everyone has their own speed, and looking at the market sentiments, the demands, and eventually we will see a world which adopts and runs on digital assets. Great.
you, Aditya. I think now we open the floor to questions. I'll stay close to the audience and see if there's any questions raised. If there are any questions for people who joined virtually, you could please write the question in the box on the right. Any questions from you guys?
Yes, Zajong.
So I think it's an interesting area. If you look at how the new infrastructure of digital assets have been developed, it's not really a centralized process. And arguably, the most opportunity lies with how the new infrastructure enhance the existing financial infrastructure. So if you look at the regulatory landscape, as you said, like most of the regulatory approach is still very much inward-looking based on specific jurisdictions. So how will these two incompatible systems interact with each other?
Yep, a very valid question coming from ex-banker. From what I have seen and experienced from my previous involvement in this particular area is that certainly there is some friction, because the existing way of these financial institutions or the technology working, how do it adopt to the newer technology, because both have been developed on very different foundations. One which completely works on centralized, and the other which is completely decentralized. In terms of tech stack, in terms of exposures, there are various differences. So this is something which most of the financial institutions are trying to address as of now. And what I have seen is that based on the recent successes is that there exists two worlds. One which still runs on the traditional finance or traditional way of working, and the digital world. That's why the new terminologies now, TradeFi and DeFi and CeFi. So there are certain overlaps. So how it is working is that that most of the new asset classes are taking the new route of digital, while the existing ways of doing transactions are still being done on traditional rails. So for example, again I'll take bond issuance for example. So the new bond issuances are being done digitally, but again for the settlement and for the payment, the existing systems are being used. So they are taking the best of both the worlds and trying to see how they can be married together. Thank you. Yes, Basil.
So coming from a technology aspect here, if I look at my previous engagements in Qatar specifically, coming with a new digital initiative, from a technology perspective, I mean, there are timelines, etc., and this is doable. But I believe from a regulatory framework, these new tools needs to be empowered to encourage people to use the new technology. I'll give you an example on, you mentioned about lease payments and checks, etc. There have been multiple initiatives where they wanted to replace this with some, let's say, mandate or automated mandate systems. And they had to look at the power of a check that you can send someone to prison if they fail to pay. But if they fail to pay a mandate, it would take years. So a tenant or a landlord would definitely be asking for a check. So how are we handling these situations to empower these new tools?
Yep. So addressing the legal and so that's why if you see that most of these jurisdictions are working on the rights and obligations associated with these digital assets, because as you rightly mentioned, the existing instruments take care of all the aspects of it and ensures everyone is safeguarded. But how do you transform it into a digital world, and so that it actually doesn't reduce but improves, right? So, so that's how the work entirely starts. First, it starts with the legal and regulatory, and then expands to the other aspects. But again, there is a contradiction to it. Unlike other financial instrument, this is an instrument which has been developed first by technology. Generally, if you see in a in an organization, how it happens is the business requirement comes. Then at the end it comes to the technical or technology team. Then we started discussing that how technically it can be done. This has been done the other way around. First the technology came, and then we started working on that, how we can develop value propositions around it. But again, a unique thing which has happened together with it is that earlier we would see that a one-sided approach where we would see regulators coming to us with the rules and regulations, and we will start working according to it. But here in this case, the entire community is coming together, starting from technology, then comes business and the regulators together to work things out, that how to enforce certain rights. You need to make sure that the technology is compatible of doing it, because here the technology is doing the work on your behalf. The lawyers will come at the last. First the technology or the smart contract, what they call in the DLT, will enforce the right and other obligations. So quite unique, and it's a collective exercise. We have to understand all the aspects of it, how we are when we are creating new products as well as addressing the existing ones. Yes.
In my opinion, to adopt any technology, we have to work simultaneously with regulations, because nowadays the end user, individual or owner of business, their cost is double.
Yes.
To shift to technology, and at the same time he has to work papers
Yes.
and do all this stuff. So we have to push more to regulate the technology to cover services. Beautiful.
They always remains a fiction that while the existing methods are working, how do we why do I spend on the new one, right?
Yeah.
Same question is asked, that my existing car is working, why do I buy a new one? There are a lot of decision making points, and it will always be, and I have seen that these models will have to support hybrid, right? The traditional way of doing and the new way of doing business, because one is that we can't exclude anyone from this ecosystem, and that was the very first challenge which we came towards, right? That I want to move everything digital, but is everyone ready to move digital? That's the point, right? So we have to see that how the heaven and earth meet together and still coexist.
We are in a critical time.
Yes. Though the transition will see, we had everyone over here are using plastic money, right? Everyone has credit and debit cards, but you are still carrying currencies in your wallet. The same will happen with these implementations too, that the digital presence will be available and the existing too, till everything can be migrated. But again, that will happen with the traditional, when we are transforming the traditional business to the digital business. But in this case, there will be some businesses which will directly move to these platforms, which did not exist today or existed theoretically today, will move to direct to digital, which is something where we will not have legacy issues. We can directly have new type of issues there.
Thank you.
Yes.
Yeah, how do you see the governmental bodies here when it comes to openness, integration, and with the private sector, especially when it comes to these tasks? Like, for example, if we have a new digital initiative here that require the verification of QID, let's say. So if you can answer that from like a macro, like let's say governmental bodies in Qatar, how are they progressing right now? If you have any information about that, and how this could be easy in the next year or two, and after that the QFC, since we're already like when it comes to Fintech or any digital initiative, needs some certain automation for certain processes. How do you see that?
Yep. Again, this will be my personal opinion, and how I see is that the building blocks are being developed, are already in place. Right now, for example, all our QID and other information is digital, right? Now with just a scan of the QR code which is behind the QID, all the information can be derived. You saw a successful implementation of that during COVID, that all the tracking and vaccination was being digitally monitored, right? So this is how these building blocks will enable the other value propositions. So, and it will all happen step by step, right? Because it has to include everyone, can't exclude anyone from this, otherwise the entire proposition fails. This will enhance the eKYC function, first of all. Second is that the data is available digitally, right? So a lot of information earlier which our census or our data collections have to be explicitly introduced to get the information, now will be available with the policy makers. So they can make good policies, they can make well-informed policies with the data readily available with them. All these various building blocks will converge together, right? How it will converge together is the entire digital journey of any path. You go to hospital, all your medical records are there. You go to a financial institution to open a bank account, you don't need to carry paper. So you can already see that the journey has started, and we will eventually reach that, the entire digital. And also with the other question of your that application of digital asset in that. Again, these will all act as a building block. So, for example, if tomorrow a company comes here and wants to issue any of the product digitally, right? The entire digital journey will help. We will certainly want to see that how digital onboarding and digital eKYC can be done. That can only happen if all the information available with me is digital, right? So the first step has already been taken, well settled, done. Now is moving to the next level. In terms of, again, it will be a speculation because there are a lot of market dynamics, right? And though a lot of these things sounds fancy, that why can't we do cryptocurrencies, why can't we do that? But again, we should take a very measured approach, that this also exposes us to a lot of risks, right? I personally won't want to keep my life saving with any institutions which is cowboyish in nature, right? We always want to see stability, though we want to look for a very flamboyant future, but we also want to chase stability. So it has to be a very balanced approach. Yes.
Hi, this is Ibrahim. I introduce myself as a blockchain advocate. I'd like to thank you, QFC, for this beautiful session, showing the beauty of DLT, blockchain, and taking insights into the future. My question again is somehow related to the regulations. From what you explained is that the DAO is organizing the relationship in this new digital world, where it's protecting people from people somehow through these protocols, trustless protocols, and all these things. How would the regulations, don't you think that regulators needs to upgrade or update the understanding of the institution and concepts towards this fourth revolution, if we call it that way, so they are able to understand it and regulate it properly for people to make extra protection layers?
Yes. So certainly agree with that, and most of the time I have seen regulators on the top of this education journey. But again, to be fair to everyone, like there are new propositions, new technologies coming every day, right? So again, putting a snapshot of the previous and then learning from there. It's quite a continuous journey, I will say, and if you see that, means I'm not sure if you have the visibility there or not, but the limited visibility which I have seen a lot of regulators working together to educate each other. There are various forums on which we participate, we learn from others' experiences and share ours too. So this exercise is already happening, and again it is very unique in that nature. Earlier there used to be one annual conference where all will come together and share this. But now it has become a very continuous exercise where we get together and discuss about each and every detail. Okay. Any questions online?
I think that's it for questions. Thank you very much,
Yeah.
Aditya.
Thank you very much.
I would just stand here and I would like to thank everyone who joined us virtually and physically. And this concludes our first session for Tech Talks this year, and hopefully we'll see you in the next session. Thank you all.
Thank you.